Hello and welcome to this Business Day TV special. I'm Bronwyn Seaborn. Well, mining has a long history in South Africa and is a crucial contributor to the economy. But the sector is facing significant challenges: unstable electricity supply, crumbling water infrastructure, severe logistical disruptions, and rising costs, just to name a few. This means that the industry is creating less jobs and also investing less. So where to from here? I'm joined now by Mzila Mthenjane, CEO of the Minerals Council South Africa, to discuss this further. Mzila, thanks so much for your time today.
Thank you for having me. Looking forward to our discussion.
Yes, so let's get it underway with a very simple but complicated question. Is South Africa's mining sector in crisis?
I'm hesitant to agree with that question, but I think certainly we're under a degree of distress that we are responding to. There are a number of areas where I think perhaps 2 to 3 years ago you could have accurately described it as being in crisis. But I think given the response that we've seen in electricity and logistics and the results that are coming through, I would not attribute the word crisis to that, but I think there's a lot of work that needs to be done for the industry to really perform at what we often call its potential.
So if we move now and put the crisis behind us, let's take a look at some of those challenges a little bit more in depth and start with power supply. We did have load shedding knock the sector back quite significantly in the recent years, but lights now remaining on for the most part. Are you confident the worst is behind us on that front?
No, I think it is, and the effort that the new management team has put in place and working very closely with the Energy Council, amongst others, and in the NECOM, which is the crisis committee that was established, we have several mining CEOs also present and giving their inputs. And then I think more importantly, the investments that the mining industry has made into renewables in order to supplement some of the challenges on the coal-fired power stations. I think that is indicating that I think the prospects are good. So from a generation perspective, we were not where we should be, especially if we look at the fact that the EAF, the electricity available factor, is in the 60s, which is a huge improvement from where it was. So I think we certainly are heading in the right direction.
Heading in the right direction, but why I ask that question is because there is this notion that energy demand is actually just not at what it was or what it should be. And so by default, really, we look like we're making gains on the energy front when actually we aren't. And then so people are saying that, when the commodity cycle turns and prices pick up and production then picks up as well, we might just be right where we started.
No, that's absolutely right. I would agree with that statement that we're not generating the level and volume of electricity that is required to really drive the kind of growth that we need in South Africa. So, if we're wanting upwards of 3% economic growth driven by, amongst others, mining, which is quite an energy-intensive industry, and you also would have seen the comments around the need for beneficiation, which will add and further demand of electricity. We're not where we should be in as far as the supply of electricity is concerned. Now, I'd agree with that.
We're going to get into a bit more detail on the beneficiation in just a bit. But before we get there, while miners can access electricity now, it does come at a hefty cost. The latest tariff hike has come in at 13%, and that follows years of similar increases. So just give us a sense of just how much of an impact that has on the balance sheets of miners in South Africa.
It has had an impact on the operating costs. Firstly, if you look at, I think there's a number of about 700% increase over the past 10 years in terms of the cost of electricity for mining, and this is making mining uncompetitive. And so the response that we've seen from mining companies in terms of investing in renewables has been welcome. And obviously that has been in the first instance to try and ensure availability of electricity given the load shedding that was experienced. But with the installation of renewables, it means that you're using less of Eskom's electricity. So I think when you do a weighted average, it does tend to bring down the cost of electricity for the operations only slightly. In as far as the balance sheet is concerned, I mean, I think the big issue is whether in investing in renewables, the mining companies own the renewable generation asset, which would put a demand on cash and therefore on their balance sheet, or do they let it be a service that is provided by a third party and really only have access to the electricity through operating cost? So there's been a mixture of those approaches in terms of ensuring and responding to the risk of electricity and also responding to the increasing price of electricity.
So those are some of the measures that miners can look at to contain costs from the energy perspective. But also one way to contain costs or to deal with rising costs is that you could sell more. And to do that, you'd need to get more of your product to port. And Transnet kind of has led us down there. How are you rating the progress being made on that front?
Well, it has been slow. But I think, the rapid reforms that came through towards the end of 2024 were encouraging. But I think even more importantly, the involvement of our members in each of the corridors in working alongside and with Transnet or TFR specifically, as well as investing in some of the critical equipment to ensure that, there was no delay in the supply of that equipment, were Transnet to pursue their own procurement process. We've seen improvements in the performance of Transnet, and just a conversation earlier, in the month with Transnet, they were indicating that I think since the beginning of this year, there have been some very good performances on the coal side, particularly, but also on the iron ore side. So it's been slow, but it's certainly delivering results, and it looks like these will be sustainable results and performance. And then with the reforms, and then as we see the participation of private sector, we would like to see that momentum continue to increase and to get the rail and ports back to previous levels of about 70 to 75 million tons per year.
So some green shoots coming to the fore there, but what you're saying really just highlighting some of the challenges that still exist. And yet amidst it all, as you mentioned, there are these discussions around beneficiation that still need to happen. Government really trying to put this at the top of the agenda, and they can do this really in two ways, right? They can either use a stick or a carrot approach. In the discussions you've had on beneficiation specifically, which way are we leaning? Are we going carrot or are we going stick on this?
I think it should be a more carrot than stick because, it's not the first time we're having a conversation about beneficiation in South Africa. And secondly, we shouldn't be having a conversation about beneficiation as if South Africa is not beneficiating already. And so an important starting point is then really to be looking at how we're currently doing in terms of beneficiation of current minerals in South Africa. And unfortunately, it's not a very good picture. I only have to say AMSA, in terms of what's happening on the steel side, and that's in terms of beneficiation of iron ore. And then we're seeing the ferrochrome industry also being severely affected as a result of previously the availability of electricity, but now the cost of electricity. And unfortunately, what has happened is that during the time that we've been experiencing load shedding, other countries have actually taken up that slack, built up the beneficiation capacity, and all they need now from South Africa is the chrome ore. And so we're losing out on that beneficiation. And so if we're going to talk beneficiation looking forward now, especially in the context of the conversation on critical minerals, we have to start with fixing what is broken at the moment. And secondly, we should really take a medium to longer term view, which is informed by how are we going to be ensuring affordable and reliable electricity at the scale that will actually encourage investment in industrialization. And then secondly, it's important that in how we talk about beneficiation and plan for it, we don't introduce restrictions across all minerals, which in essence will have the negative effect of affecting any investment in mining, which then will leave us with no strategy at all in terms of the economy in as far as encouraging mining and exploration, as well as the benefits from that in terms of potential beneficiation.
So if we are lucky enough to get this carrot approach that you're hoping for, what does that realistically look like? Is it electricity tariffs linked to commodity prices, down to the very granular detail of it? For you, what does that carrot approach look like?
So I think in the first instance, and this is talking now with the miner's hat, is that we have to make sure that we reduce all the risks that we currently perceive and experience in as far as mining. So we need to have and encourage as much exploration as possible across a whole range of minerals, of which South Africa has significant mineral endowment. We have to ensure that the mining and the conduct of mining operations from a legislative perspective has got less barriers. And once an entrepreneur then sees that the supply of these minerals in terms of volumes is sufficient, then it becomes worthwhile to invest in those downstream opportunities. And this is where incentives such as tax incentives in terms of how you encourage capital to be invested becomes important. The trading of those commodities in terms of ensuring access to markets. I'm not an economist, but I think there are many examples that we can quote in terms of how other countries have provided incentives in order to encourage beneficiation. And I think a very important one as well is also ensuring that the skills, we need to focus a lot more on a wide range of skills such that out of that, people can actually choose as a career or as a business opportunities in beneficiation.
Mzila, it makes sense to go down this route as you've outlaid it to me.
Yeah.
When you outlay it to government, are they open to these kinds of ideas to move the industry forward?
They are, and it is going to, and I think it's ongoing conversations. I think my task from a Minerals Council perspective and on behalf of members is really to provide inputs in terms of the role that the mining industry can play and the role that the mining industry shouldn't play. We were part of a panel with the minister at the mining indaba where we said miners are exactly the wrong people to get involved in beneficiation. And this is why, as we currently looking at the MPRDA review, one of my ideas was that I think any reference to beneficiation should rather be put in an industrial policy statement rather than in a mining development policy. So as to give clarity in terms of, because mining per se requires significant amount of capital, but so does beneficiation. And it's a different profile of risks that you're taking on when you're investing in beneficiation and the types of risk which miners don't have any appreciation for and would prefer to give to somebody else. And these are the conversations that we are constantly trying to make government understand that miners per se are not against beneficiation, but I think there needs to be a different way of thinking and approach to how we approach beneficiation. And secondly, we have to consider that we are wanting to enter beneficiation in a global market where there's already extensive establishment of centers that beneficiate much better from a cost perspective, from an electricity supply perspective, and the skills perspective. And so we have to think clearly about what our competitive advantage would be from a cost input, but also our comparative advantage in as far as proximity to markets of those end products that will be beneficiated.
Mzila, we're unfortunately out of time, so let's leave it there for today. Thank you so much for joining us here. Mzila Mthenjane is the CEO of the Minerals Council South Africa. And that's where I leave things with you for now, but there's lots more to come on Business Day TV, so keep watching.